Level 1. No credit, no money. You need $400. Not $4,000, $400. $400, your car registration is due, and the account says $12. You go online and search for a personal loan. The first result is a payday lender. 400% APR. You read it twice, you think it must be a typo. It is not a typo. That is the price of money when lenders do not trust you. You apply anyway because the registration cannot wait. They approve you in 4 minutes. No credit check. No income verification, just a bank account number and a signature. The $400 hits your account the same day. You feel relief for about 6 hours. Then you read the repayment terms. You owe $460 in 2 weeks. That is $60 for 14 days. If you cannot pay it back in full, they roll it over. Another fee. Another 2 weeks. The $400 loan becomes $500 and $20 becomes $640. Becomes a number that does not feel connected to the original problem anymore. You call the lender and ask for an extension. The voice on the phone is polite, scripted, and completely unmoved. They tell you the terms were in the agreement. They are right. You signed it, you go to a bank and ask about a personal loan. They run your credit. There is almost nothing there, no score, no history, no track record. The banker explains that without a credit history, there is nothing for them to evaluate. She is not unkind. She is just reading what the system says. The system says you are invisible. Invisible to lenders means the same thing as risky, and risky means no. You leave with nothing except the knowledge that the least trustworthy lenders were the ones who said yes the fastest. At this level, access to money costs the most, not because you are irresponsible, because you are unknown. Level 2. $500 in the bank. Credit score under 580. You are not invisible anymore. You are worse than invisible. You are flagged. A credit score under 580 means the system has seen you. It just did not like what it saw. A missed payment. A collection account. A credit card that went to 90% utilization during a hard month. The system recorded it, scored it, and decided you are a risk. You apply for a credit card. The only offer you qualify for is a secured card. You have to deposit $300 of your own money to get a $300 limit. You are essentially borrowing from yourself at 26% interest. The bank is taking almost zero risk. You are taking all of it. But you need to build history, so you take the card. You apply for an auto loan because your car finally gave out. You get approved. The rate is 18% on a used 2019 sedan. Someone with a 750 credit score is getting 6% on a new vehicle at the same dealership today. You are paying 3 times as much for the privilege of borrowing money to buy a worse car. The math is not a mistake. That is how the system is designed to work at this level. You try to rent an apartment and the landlord pulls your credit. He looks at the screen and tells you he requires a double deposit. First month, last month, and a security deposit. 3 months up front because the number next to your name does not inspire confidence. You pay it because you need the apartment. Every transaction at this level costs more. Every approval comes with strings. The lenders who say yes are pricing in the risk they believe you represent, and that price is passed directly to you. Level 3. $5,000 in the bank. Credit score around 640. Something shifted. Not dramatically, not in a way anyone would notice from the outside, but the letters coming in the mail are different now. Pre-approval offers. Real ones. Not secured cards, actual unsecured credit with a $1,500 limit and an interest rate of 22%. The same institution that would have ignored you 6 months ago just printed your name in their return address window. You apply for a personal loan. $5,000 for home repairs. Approved in 48 hours, the rate is 14%. Not great, but the process worked. No payday lender, no triple-digit APR, an actual bank with an actual loan at a rate that, while expensive, is survivable. You go to a credit union and ask about an auto loan. They approve you at 11%, down from 18 at the dealership 6 months ago. The price of money is getting cheaper, not because you negotiated harder, but because your profile changed. The system is beginning to see you differently. But here's where most people stop paying attention. The fee structures are still working against you. Late fees. Annual fees on the new card or loan origination fee you did not fully read. The approvals feel like wins, and they are compared to where you were. But the lenders at this level are still making significant margin on every product they sell you. You are profitable to them now, just not profitable enough to be treated well. You walk into the bank and wait in line, same as everyone else. No one knows your name. The teller processes your deposit and moves on. You exist in the system, you just do not matter to it yet. Level 4. $25,000 in the bank. Credit score around 700. You qualify for a mortgage. That sentence matters more than people realize. Homeownership is the single largest wealth building mechanism available to the average American, and the lending system just decided you are eligible to access it. Not because you are wealthy, because your profile finally cleared the minimum bar. A conventional mortgage with a 700 credit score and a standard down payment gets you a rate that is competitive. Not the best rate, not the rate the banker with the corner office is getting, but a real rate. A 30-year fixed product with a payment you can plan around. The house starts building equity the day you close. You also start getting calls from lenders. Not about problems, about products. A refinance offer. A home equity line of credit you have not asked about yet. A credit card with rewards and an $8,000 limit. The institution is starting to come to you instead of waiting for you to come in. A fee shows up on your statement. You call about it, a representative answers, listens, and removes it. No argument. No hold music for 40 minutes. The same fee that would have taken 3 transfers and a complaint form 6 months ago just disappeared in one phone call. You are not being treated well because you are special. You are being treated better because your account looks like something the bank wants to keep. That is not respect, it is recognition. But at this level, it feels like the same thing. Level 5, $100,000 in the bank. Credit score above 750. The rate you get on your next loan is the number your parents always told you to aim for. Under 7% on a 30-year mortgage. Under 5% on an auto loan. A personal line of credit at prime +1. The price of money dropped because the risk profile associated with your name dropped. You did not negotiate those rates. Your profile did the work for you before you walked in the door. A relationship banker calls you. A real person, not a recording. He introduces himself and gives you a direct number. He asks about your financial goals, your timeline, your upcoming plans. He schedules a review. The same institution that put you on hold for 45 minutes at $500 just called you first thing on a Tuesday morning. Your credit limit increased without you asking. $8,000 became $22,000 overnight. The bank decided unilaterally that you are worth more rope. That decision was made by an algorithm reviewing your payment history, your utilization rate, and your income pattern. The algorithm liked what it saw. You start to understand something that nobody tells you at level 1 or 2 or 3. The system is not random, it is not cruel, it is just built to reward consistency over time. Every on-time payment you made when you had nothing was being recorded, scored, weighted. And now, those decisions from years ago are lowering the price of every dollar you borrow today. Level 6, $500,000 in the bank. You stop going to the bank starts coming to you. Your relationship banker schedules a meeting at your office. He brings a colleague who handles wealth management lending. They arrive with a printed analysis of your current debt structure and 3 recommendations for how to optimize it. They do not try to sell you anything in the room. The selling already happened before they knocked. You just did not see it. You call about a discrepancy on a loan statement. Someone answers on the second ring, no automated menu, no hold music. A person who knows your name and your account before you finish your first sentence. The problem is resolved in the same call. You hang up in under 4 minutes. Lenders are now competing for your business. A competing bank reaches out to offer better terms on your mortgage. You mention it to your banker. He calls back within 2 hours. With a counter, an institution that had no idea who you were at level 2 is now making calls to keep you. You receive an offer for a portfolio loan, a product that does not appear in any brochure, a loan structured around your specific asset mix, your income pattern, your tax situation. The terms were written for your profile, not pulled from a standard menu. This is the point where most people realize that there are 2 completely different lending systems operating in this country. One for people below this level, one for people here and above. The system did not change. You crossed a line the system had been holding all along. Level 7, $5 million in net worth, private lending. The phrase sounds similar to wealth management. It is not. Wealth management is a service. Private lending is a relationship. And relationships at this level do not follow the same rule book. You have a private banker, a single person who manages fewer than 20 accounts. Yours is one of them. He knows your full balance sheet, your real estate holdings, your business income structure, your estate plans. He does not ask about your credit score because your credit score is irrelevant at this level. The conversation is about assets, not history. The interest rate on your next real estate acquisition is negotiated in a phone call, not submitted online, not processed through an automated underwriting system, negotiated 2 people on a phone call agreeing on terms that will not appear on any public rate sheet. You want to purchase a commercial property. The bank does not ask how much you make, they ask what the property generates. The deal underwrites itself based on the asset, not the borrower. You are no longer being evaluated on your income. You are being evaluated on your judgment. The paperwork that takes a conventional borrower 6 weeks gets processed in 10 business days. Not because the rules are different, because the relationship justifies priority. Someone inside the institution was told whose file it is. That matters. You are not a customer at this level. You are an account that people inside the institution are measured by. Losing you would affect someone's year-end review. That changes how every interaction goes, whether anyone says it out loud or not. Level 8, $1 billion. You do not borrow money anymore. You structure it. The distinction matters. Borrowing means you need something and someone else has it. Structuring means you are building a financial arrangement that serves multiple parties and you happen to be the anchor. At $1 billion, banks do not lend to you. They compete to participate in deals you are already leading. You do not have a banker, you have a team. Private wealth director, a credit structuring specialist, a relationship manager whose sole job is to make sure you never feel friction. 3 people inside the institution whose performance metrics include the health of your relationship. They do not know that. But the math is real. The deals are not products, they are conversations. A syndicated loan for a real estate development is assembled across multiple lenders who each want a piece of the transaction because your name on the deal reduces their risk. The interest rate is not a rate. It is a negotiated cost of capital tied to a floating benchmark, with conditions you helped write. You sit in a room, and the room has no bank logo on the door. The table is one piece of wood. The people across from it flew in this morning. The deal being discussed will not appear on any public prospectus. The room exists because the relationship justifies it. Banks consult you now. A chief credit officer calls to ask your read on commercial real estate in the current rate environment. A head of private banking asks what products their ultra-high net worth clients are looking for. You are not just a client at this level. You are a source of intelligence the institution uses to serve other clients. The same system that charged you $60 for a 2-week loan at level 1 is now asking for your opinion on how it should operate. Because somewhere right now, someone is applying for a payday loan. They need $400, their car registration is due, and the account says $12. The approval takes 4 minutes. No credit check, no income verification, just a bank account number and a signature. They feel relief for about 6 hours. They do not know that the system that just charged them 400% is the same system that will one day call them for advice if the number next to their name is big enough. The lender does not change at every level. The lender just shows you a different face based on what your file says you are worth. The face at level 1 and the face at level 8 belong to the same institution. You just have to move through enough levels to see them both. The system was never broken. It was always working exactly the way it was built to. The question is never whether the system will treat you differently as you build wealth. It will. The question is whether you understand the rules well enough to use them. Now you do. If this opened your eyes to how lenders actually operate, the next video breaks down exactly how to move from level 1 to level 3 faster than most people think is possible.